This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks pulled back hard in September as interest rates and oil soared. The S&P 500 dropped almost 5% last month, its biggest decline since December 2022. About 85% of the index's members lost value. Similar to August, energy was the only positive sector. Yields on the 10-year Treasury note climbed to their highest levels since October 2007, after the Federal Reserve indicated it's likely to cut interest rates less next year. Other central bankers, including Neil Kashkari and Astan Goolsbee, reiterated the hawkish message in speeches. In addition to the Fed shock, OPEC Plus extended oil production cuts through the end of the year. Russia also halted diesel exports. Those events drove crude oil to its highest in a year, and diesel to a record price. Most of the big decliners in September were associated with the double trend of higher rates and higher oil. Airlines, which carry heavy debt loads and are sensitive to fuel prices, lost more than 10%. Real estate investment trusts and home builders fell sharply. Solar energy stocks had their worst month of the year. They're also sensitive to interest rates for project financing. Precious metals declined as the dollar rallied. Amazon.com had its biggest monthly drop since February, after the Federal Trade Commission opened an antitrust case against the e-commerce giant. Apple fell after China banned iPhones for some government workers, but CEO Tim Cook later said the company is investing in artificial intelligence. That could be important over time, because Apple has yet to make any big AI announcements. Meta Platforms was the only mega-cap growth stock to rise last month. One noteworthy mover last week was Advanced Micro Devices, which rose 6.9% after bouncing at its 200-day moving average. It also got a boost after Microsoft's chief technology officer said AMD was making gains in AI. We'll now chart the market. The S&P 500 dropped all 4 weeks in August, its longest weekly losing streak since April and May 2022. Some patterns may suggest the index is trying to find a bottom. First, last Wednesday, September 27th, prices dropped to their lowest level since early June, before reversing higher. The result was a hammer candlestick pattern, which may indicate a bearish move is ending. The index ended the next sessions above Wednesday's close, potentially confirming the hammer. The S&P 500 is also stabilizing around a price zone from early June, shortly before rallying. Third, oscillators like RSI and stochastics are near oversold levels. Some chart watchers may also look for the index to bounce from the bottom of its falling price channel. Stocks have also ended a negative quarter after rallying in the spring and early summer. Attention could now focus on catalysts like earnings season in a few weeks. Next, sentiment may be overly negative. Less than 28% of respondents termed themselves bullish in the latest survey by the American Association of Individual Investors. Almost 41% were bearish. Both of those matched readings in May as Wall Street worried about the debt ceiling. Finally, investors are likely to keep watching Treasury yields and oil prices. Further upside in either could hurt stock sentiment. However, pullbacks could potentially boost risk appetite. This week marks the start of the fourth quarter. It has some important monthly data for September. Attention could also focus on the UAW strike. There are no important earnings. The Institute for Supply Management's manufacturing report is on Monday morning. ADP's employment report is on Wednesday morning, followed by ISM's service sector report. Jobless claims are on Thursday. Friday brings the pivotal employment report, which includes payroll growth, wages, and unemployment. It could have a big impact on interest rates and the broader market.